Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering on M1 Finance what exactly happens when the financial institutions are closed, but the stock market remains open. Now there are certain days during the year, such as Columbus Day, Veterans Day, and many others here, but the stock market remains open, but the financial institutions are closed. So in this video, we're going to be going over what exactly takes place here on M1 Finance. So if you are brand new to my channel, I do make stock market, personal finance, real estate investment videos every single week. So consider subscribing, and let's go ahead and get into it. The banks will be taking the day off. I'll be on banker's hours. I'm off on Monday. So, but the stock market will remain open. Individuals, stock market investors can actively trade on the stock market. So what exactly happens over on M1 Finance? Well, a couple days prior to this day that the financial institutions were going to be closed, we started notifying everyone that we will be closed on Monday, November 12th in recognition of Veterans Day. So you get an email saying, hey, we're going to be moving money into your account here on Friday. So for example, I put in $330 every single Monday, but because Monday falls on Veterans Day, they moved the money into the account here on Friday, and you can see here we have $330.10 in cash, and our portfolio has estimated trades. So they move money into your investment account, your broker account, and now you just sort of sit and wait until Monday. And on Monday, when the market's open, M1 Finance has a trading window. It's, I believe, at 8 in the morning, somewhere around that time, 8 or 9 p.m., depending on where you are. I live over here on the West Coast. I'm in Oregon, so I believe all of our trades take place at 8 a.m. So depending on what is currently up or down here, actively, we can see that M1 Finance will automatically invest your money if you have the funding chosen here for auto invest. So if your money exceeds $10 sitting in cash, M1 Finance will automatically invest the entire balance. If you want to set it up a little bit higher, you can bump it up to $15, $20, $30. That way, if you have a lot of dividends coming in, say up to $200, $300, you can have it sit there for a little bit, wait for stocks that you want to invest in, and then pick those specifically. Otherwise, you can just let M1 Finance decide for you. Or if you just don't want to have your money invested at all, you can kind of just have it sit in there in a bucket kind of building up. Or if you're trying to retire and use those dividends, you can just turn it off and withdraw those dividends into your own bank account. So those are our funding options there. So we have $330.10 hidden in cash waiting to invest here on Monday. So what exactly is going to take place? So right here, we can see that our portfolio has estimated trades. If we were to select this, M1 Finance will say estimated trades. Okay, tomorrow morning, the trading window begins at Monday through Friday, 9 a.m. Central Time. So Central Time is 1 hour ahead of me. So yep, 8 a.m. is when these trades will take place. Actual trades may slightly vary, or may vary slightly from estimated trades as prices do fluctuate. So right now, we can see that Apple is set up to have an amount of $168.96 sent into it, and Cisco is here. It's going to be placed in $161.13. That'll make up $330.09. So I'll have 1 cent sitting there in cash, but that's completely fine. At least in this way, I do have all of my money, most or all of my money working for me, and it's specifically targeting stocks here that I wouldn't otherwise be able to buy. Apple's trading at $204 currently right now, so I wouldn't normally be able to buy a complete share of Apple on Merrill Edge, on Robinhood, and so on. But on the M1 Finance platform, which we covered many times over the benefits of investing here in the self-directed individual account, partial trades, free trades, and such, I'm able to buy a partial share, a half a partial share, a little bit over half a partial share of Apple, and then a few shares here of Cisco. But say, for example, what if I don't want to buy Apple? I don't want to buy Cisco right now. Say that here, if we look at our total gains for the year, Cisco is up 22.88% in my portfolio, and Apple is up 18.09%. Now, why exactly would M1 Finance target these specific stocks? Well, right now, our equity in Apple is at a 6.3% out of our target of 7%. That's a difference of 0.7 right there. Cisco is sitting at 6.4 out of 7. That's a difference of 0.6. Now we do have Johnson & Johnson here at a difference of 0.7 as well. So I find it kind of weird that Johnson & Johnson or even WP Carry here sitting at a 6.1 out of 7 is actually not shown up as first. But of course, these are all estimated trades. These aren't exactly what M1 Finance will place. If we can click here on how exactly M1 Finance trades, we've already discussed it in many videos. It goes and it takes a look at your equity percentage to your target percentage, and then it picks those specific stocks. You can choose to invest specifically into stocks. So what I've done here in this example, I went ahead and sorted it by gains. So I have a few more winners than I do losers here. We had a bunch of stocks here down towards the bottom that were actually in the negative by quite a bit, a much larger percentage. We had Stanley Black & Decker that was down 25-30% a couple weeks ago. We had Altria, that was down 25% just a few weeks ago. Kimberly-Clark was down pretty hard. So these have came off their lows. Caterpillar and Avery are currently in that 20% down range. So these are at a discount of over 20% from where I purchased them. Whereas Apple and Cisco are sitting up here at the top. If I make a purchase in the Apple, this is going to be averaging up my position. I bought Apple in that, this is showing that my average stock price is $180. That's because over just here the last couple weeks or so, I bought into Apple just a couple weeks ago at $199. I believe I bought it into again at $198, but I've been kind of averaging up my position from the initial buy point of $165. So what I want to do is not really target Apple in my upcoming money transfer, because it would be averaging me up. My average share price is currently down. I don't find Apple right now at a high discount in comparison to a few other positions. So instead of including this one in my estimated trades, I may choose to invest in a few other stocks. And this can be done here on M1 Finance by specifically targeting the stocks here. But so here, for example, I went ahead and sorted these by the lowest down to the highest down. And what I've gone ahead and done is, because these are all dividend stocks, I like to use dividend.com. So if I want to target specific money to move my money into, I can look at when their ex-dividend date is and kind of do a double capture. I can buy those stocks back at I can buy additional shares at a discount of 2 to 20% at a discount, with ex-dividends coming up with a higher yield on cost and lowering my initial average unit cost. So JP Morgan ex-dividend just recently came up just a few weeks ago. I got already paid out those dividends here on the 31st of October. So JP Morgan, it already came and gone. Kimberly-Clark has already came and gone. Lockheed Martin is going ex-dividend here on the 30th of November. That's just a few weeks away. I believe it's 3 weeks away here. And then we would get paid out about $1.20 per share. We can actually scroll down here towards the bottom. They would pay out $2.20 per share. And they are currently down in my position here. Lockheed Martin down 3.31%. So if I wanted to add a little bit more to Lockheed Martin, I could lower my yield on cost. I could lower my unit cost average, and I could pick up some more shares prior to ex-dividend, which would increase my dividend payout going kind of forward. Altria, they've also already gone through a ex-dividend and payout day back then in October. AbbVie, this one I still have a little bit of time to kind of average down in this position if I do want to. It's only down here around 4.78%. It's not at a huge discount right now in comparison to where it had been in the past. It has kind of slightly started moving up in the positive direction, but it recently did increase their dividend payout from 96 cents to now $1.07 per share. So it's a very nice rate hike, or a dividend hike there. And they're not going ex-dividend until January 14th. I still have some time to buy some more shares until this one does go ex-dividend. Stanley Black & Decker, again, towards the end of the month. This one's going ex-dividend on November 29th. They're paying out 66 cents per share. They did increase their dividend just not too long ago. I bought them during the initial. I've held them for the past 3 months now, I believe, right around 2-3 months now. I've already received a dividend payout from these ones back in September. So they're a quarterly paying stock here. So I may add some more positions to Stanley Black & Decker. This one's going ex-dividend. So Lockheed Martin, Stanley Black & Decker, both of these have been paying out dividends for more than 10 years. So those are high probable stocks to add into. We also have AT&T that is currently down in the position. We have Caterpillar that is currently down in the position. And we have Avery that is currently down in the position. This one's going ex-dividend on the 4th of December. So paper and paper products. This one has came down. I believe this one was due to tariffs. But I haven't covered a whole lot. I haven't really looked into this one. I know Triple M got hammered. They're also in the sticky notes and what's that, tape consumer goods, very industrial sort of company, and they've been hammered recently due to tariffs as well. So I believe this one sort of within that same area, kind of getting hit by those tariffs. So this one could be a good one to average down on as well. So the three here that I'm going to be using in my example are Lockheed Martin, Stanley Black & Decker, and Avery. Now I do want to buy into 5 stocks. So what we can do is we have $330 to buy into. We can divide that by 5. We have $66 that we can add into our positions here. So I'm going to go ahead and target Lockheed Martin. Move here, click Lockheed Martin. I can go ahead and select buy sell. Go ahead and open up my order status. I have $425 of them. That's fine. I'm going to go ahead and push $66 towards a specific stock. Go ahead and hit continue and confirm. And I'm going to go ahead and do the same here for Stanley Black & Decker. So I just move back to my portfolio, look for Stanley Black & Decker, go ahead and buy sell that one. Go ahead and punch in $66, continue and confirm. And there we go. We move back into our portfolio and we do the same here for Avery. Going to go ahead and buy and sell this one. This one, you know, it's been paying out dividends for the past 7 years. Probably will continue to pay out a dividend during downturns. If we look at what they did in the past, they did cut their dividend between 2009 and 2011, I believe. Yeah, 2011 they started kind of rising back up. So this one could be a little bit risky. They don't cut it. They didn't, you know, it's basically a half a cut there. So they did cut it by 50%, sort of what General Electric did initially, but then they cut it down to a whole cent. So this one, because of that, I may just add a few more shares into this one. They have such a low payout ratio that, you know what, I'm not too worried about adding a little bit more cash into them. It'll lower my unit cost average. It'll increase my yield on cost. They're not huge positions there in my portfolio. I believe they're at a 1% or 2% within my total portfolio. I don't specifically target them, so here they're at a 3%. They're at a 3.4% right now. But all of these other ones here, not a whole lot kind of going into them. I could average down on AT&T. Let's see, where's AT&T currently sitting at as far as share price? So they have came off their lows of $30. Oh, that's my average share price. What are they at right now? $30.69. So I could add a little bit more into AT&T. It's not going ex-dividend anytime here soon, but we can go ahead and add a little bit into this one as well. And these are all for example. I'll probably, yeah, we can cancel a few of these as well. So there we have our portfolio. Now you're saying, okay, you did all these trades, you selected these stocks to add your money into. What will happen on Monday? Well, we can come back over here and we can actually take a look now at our portfolio estimates. We can click on it, and here we initially had Apple and Cisco, but now we can go and look in here. We have Avery, we have Lockheed Martin, Stanley Black & Decker, AT&T with all $66. These are guaranteed to happen on Monday. Apple and Cisco, they may not completely take place. It could not invest in Apple at all. It could not invest in Cisco at all. They could add a little bit more. It could use that $66 to average into a few other stocks that are currently down in my portfolio. It could actually tack on a little bit more into these specific stocks, but I know that guaranteed on Monday, M1 Finance currently will add $66 here to ABY, $66 to Lockheed Martin, $66 to Stanley Black & Decker, and $66 to AT&T. So that is how M1 Finance, you know, what it does when it is going into a sort of financial institutional day where it takes a day off and you're still going to have money in your account. You can still actively trade. And that is how you can target specific stocks. If you want to have your cash kind of built up on the side, your dividends and your cash reserves set up to not invest automatically, you could go about this way, targeting specific stocks, researching, you know, and looking at stocks going ex-dividend here soon. I believe WP Carey is kind of going ex-dividend here again as well. There are a few other ones here that I probably could, I'm not too afraid with averaging up in their positions. I don't know why I can't specifically type that in there. There we go. Let that one load. Maybe this one did already pay out a dividend here recently. So yeah, they just paid out here in October, so they're not going to go ex-dividend again until sometime at the end of December in 2018. So that is all I wanted to cover in today's video. What exactly takes place when the markets are open but the financial institutions are closed, and how you can target specific stocks within M1 Finance to buy stocks individually. Here you can see that these stocks now are, they have trades actively going into them. If you wanted to cancel out of these, say, hey, for example, I don't want to be adding any more money into AT&T, you can go in here, select cancel, and select yes, cancel that buy. And now if you were to look at your portfolio estimated trades, AT&T would be removed from that guaranteed purchase there on Monday. So that is it for today's video. If you did like the video, hit that thumbs up button below. If you learned something new, I always like to share as much information as I can. And I had a couple people asking me, hey, markets are going to be open, but the financial institutions are going to be closed. What exactly is going to happen? So here's the video for all of you. And that is basically it. Hope you guys enjoyed it. If you guys did, hit that thumbs up button below, share it with your friends. And thank you all for tuning in. I will see you next time. Have a great day. Bye.